Every country throughout the world is under a serious debt load. For example, the debt of the United States reached $38 trillion. The total debt on the global scale has reached $315 trillion, which tripled the world economy. But here is a remarkable contradiction. Who is debt if everyone is borrowed? The answer is much different than you think. Because when you've reviewed lenders, when you understand who is in the hands of Borken, it comes to a disturbing real water face. The world is not only for individuals, but the money itself. But in the last 3 centuries, forebenchers designed this consciously. They have developed a system that will never be paid back to debts. Governments have been convicted to borrow after each payment crisis continuously. This is not a conspiracy, it is a documented date. Meetings were organized, agreements signed, and mechanisms have passed public records. When you understand how they manage this, you will understand that $38 trillion will not be resolved. The system will definitely work in a designed way. I want to introduce this 4 architects to you. I want to explain who are those who build debt salt and why every government on the world is no longer caught in this salt. Until 1694, the kings were borrowed by traditional methods. They were committed to merchants or nobles to pay attention. If they are not able to pay, this situation was considered a bankruptcy. Kings had to borrow from other sources. This was a shameful situation for both debt areas and kings. However, this was a temporary state. The debt was either closed or paid back. The system self-cleaned. William Paterson changed everything. He was a Scottish trader who had repeatedly been rich but did not succeed and had a financial innovation idea. In 1691, in a period where the UK was in battle with France, King William III was applied to him at a time where he needed a lot. The treasure had gone and the tax revenues were not enough to meet the costs of battle. Traditional creditors did not accept new loans due to the fact that the UK had already bankruptcy. Paterson suggested to create a group of rich traders by offering a proposal to the king. This group would give an equal debt to about $300 million with its value of £1.2 million to the government. However, innovation here was that no debt will be paid back. Instead, the government paid only 8% interest annually. Paterson proposed a new institution called the UK Bank in order to implement this arrangement. This mechanism was revolutionary. Traders would deposit their gold to the UK Bank. The bank would borrow these gold into the government and pay interest to traders. However, there is a critical point here. The government didn't have to pay back the main currency. Debt was becoming permanent. Why did traders acknowledge this situation? Because interest payment was guaranteed by the parliament. As the government could tax their citizens, this interest flow would continue. Also, the bank was able to trade with credit notes given in return of gold. These notes were as valuable as cash. They were even more valuable because they paid interest. The Parliament approved the plan of Paterson in 1694 and the UK Bank was established. Traders provided their gold, the government had obtained the battle fund. Historically, the first time, the national debt has become permanent and this situation has become a feature of the system. However, the reason for bankers could not be explained by anyone whose system is profitable. The government paid 8% interest over £1.2 million annually. This means £96,000 per year. Merchants were actually purchased annuity from the government. As long as the UK exists, the money flow continued as long as it could be tax. If they want to back their gold, they could transfer bank notes to someone else. I was able to transfer debt but never paid back. However, Paterson's real DIHA appeared in the next stages. Paper money was printed on the value of the loan. This meant to produce money from debt. The government was making money in IOU. The government was able to create more money, as more debts. This has become the template of the system. The government borrows, never repaid, paying interest forever, and ultimately the debt itself turned into money. If you are a banker and are a taxpayer, this means disaster, because you never pay interest to debts that will not be eliminated. In 50 years, every major power of Europe began to adopt this model. France founded Bond General. The Netherlands already had an advanced banking system, but the government was officially formalized. When it came to 1790, the new independent United States also adopted the same system. Earlier, Alexander Hamilton clearly shaped the financial system of America based on the model of the UK bank, continuous debt, interest paid by taxes, tovels traded as money. Patterson was defeated in 1719 and found significant contributions to the establishment of the UK bank, although it is not rich. However, its developed system continues its existence even after 331 years. The British government never paid the debt, it was always refinanced, reorganized and expanded, but never ended. The debt trap was created in 1694 and continued by requesting this system since that day. At the beginning of the 1800s, governments in Europe have led to debt. They are constantly borrowed for wars, infrastructure projects and operating costs. However, an organized market was not available in this period. Every loan was individually discussed. Fees rates were quite high and only the most asset traders were able to enter these markets. Nathan Rothschild changed this situation. He was one of the architects of the industrialized state Bork. Rothschild family was hired with exchange and trade in Frankfurt. When it was born by 1800, 5 Rothschild brothers set banking activities in major European cities such as London, Paris, Frankfurt, Vienna and Naples. These links were at an unprecedented level before. They have the ability to move money faster between the limits. They use these capabilities to control the export of state debt. Nathan Rothschild in London had a strategic intelligence. During the Napoleon Wars, Nathan gave credit to the UK. But its innovation was in the form of configuring these loans. Instead of giving direct debt to the government, the state bonds were redistributed to investors by purchasing at discounted prices. Thus, he created a new market. The state had the need for money and Rothschild entered immediately. Then tovels sold to pension funds, insurance companies and rich individuals. Rothschild brought growth in this process. But there is a dark spot here. Rothschild did not only finance governments, he placed himself in such a position, governments had to use it. During the Waterloo War in 1815, Nathan Rothschild learned the mop of Napoleon before others in London. His courier network was much faster than official channels. This information used to influence the bond market. First, we have sold British bonds by specifying the lost UK. This was caused by prices falling. Other investors began to panic and sell their property. After the prices dropped, Rothschild made a large amount of purchases from these low prices. When the news of the British victory came to the next day, tovel prices rise. Rothschild did not gain millions of profits from the domestic trade that we are looking for today, but it checked information and market timing. This created the basis of the Rothschild model. To check the information, check the exporter and guide the market. Since 1820, Rothschild family had an important effect on European government debts. If you want to get a government debt, Rothschild had to go through because Rothschilds kept the investor network in their hands. The control of the distribution was on, and they were on the basis of the terms. Therefore, the debt trap has become so critical. Before Rothschild, governments could theoretically refuse their debts. The death of a king meant that they would lose by default and the system was reset. But Rothschild made the state debt in countries and cells. A British tovely belongs to a German bank that gives him an Austrian aristocracy debt. The network of ownership has become so complicated, a default situation was not only rejecting a loan, all the international financial structure threatened. This was the innovation of Rothschild. The governments have become so dependent on the default because debt increased the responsibilities of governments and triggered the default situation. Governments were covered in debt trap. They had to continue the payment and they had to pay interest of old debts. Debt trap was no longer a temporary situation, it was becoming permanent. They were the richest family on the world, they have more wealth than any kingdom. This wealth was caused by interest in government debts. They didn't produce anything, they didn't build. They give money to the states and gather an endless interest. Founded in 1694, Paterson became a government in Europe in 1815. When it comes to 1900, America has become an economic power, but still a primitive financial system was available. Banks were operating independently. The money was connected under the supply and there was no central mechanism to manage the debt. J.P. Morgan tried to fix this situation, but it was not for the public, to protect the empire of banking. 1907 was a financial panic. Exchanges crashed, banks bankruptcy and experienced economic challenges. J.P. Morgan personally made a recovery plan. The major bankers in New York gathered together, locked doors and forced them to use their own resources to stabilize bank bankruptcy. This method was successful. Morgan has become the actual central banker of America by ending the pan. But it was not possible to do it more than 70 years. That's why Morgan and its partners are looking for a permanent solution as the most powerful bankers in America. They were required by the central bank, but Americans were sensitive to their central banks. The first two banks of the United States were closed by populist oppositions. Morgan's group decided to keep the central bank secret. In 1910, representatives of Senator Nelson Aldrich and largest banks have held a secret meeting in Jekyll Island in Georgia with Morgan partners. During 9 days, they designed the structure of the Federal Reserve System. The meetings were kept secret because the people knew how the nation was created in the case of learning how the money system was created. The plan was quite effective political maneuver. The Federal Reserve would not be called a central bank, the Federal Reserve System will be understood. Rather than an institution, 12 regional banks were formed and controlled by Wall Street. The board was assigned by the president. The appearance was a democratic and public-oriented structure. However, this structure provided the control of banks. Regional Federal Reserve banks were owned by private member banks. These banks set up the Board of Regional Federal Reserves. Also, regional banks had the authority to choose the Federal Reserve Board. While some members of the state were assigned, this system was to manage bankers. The authorization to create money was given to New York Federal Reserve Bank, controlled by the largest Wall Street banks. The government is now not only from banks, but also borrowed from the Federal Reserve, and this was the opportunity to create new money for TAVL purchases. The government's debt demand has become unlimited. Before the Federal Reserve was dried, the government had a restriction on the amount of debt he could take. Banks have more money to be borrowed. However, the Federal Reserve had the capacity to create new money by purchasing state bonds. While the government took TAVL, the Fed had done this process by taking the newly created money. The government spends and debt continues with a system that is not supported by the words that the taxpayers in the balance of the Fed are constantly obliged to pay. This creates a continuous lending mechanism. There is a constant debt, because the Fed will always make purchases. FOIA's payments come to banks with the Federal Reserve System. Morgan lost his lives in 1913 and this year the Federal Reserve was founded. However, its heritage takes place as the structure that makes the U.S. the current $38 trillion debt possible. Without the Federal Reserve, the government could not be borrowed on this scale, the market would not support it. However, Fed offers an unlimited opportunity as a guaranteed buyer. Debt salt has become endless. In 1970s, the debt trap was shaped with global cooperation of Paterson, Rothschild and Morgan. While each developed country is borrowed, developing countries have remained in a different situation. These countries have paid for infrastructure and paid back to most. Debt trap extends to Paul Volcker. Volcker served as the Federal Reserve President from 1979 to 1987 and fights high inflation. While inflation is over 10%, the international reliability of the U.S. was reduced. Foreign governments have started to lose their trust with dollars. Although this situation leads to a stagnation, it had to stop inflation. In 1979, Volcker significantly increased interest rates. the federal fund rate increased from 11% to 20%, which was recorded as the highest level in the American history. This situation was controlled by inflation. But another result was the developing countries had borrowed billions of dollars in 1970s, and now due to these loans, interest rates were tripled. Mexico cost $80 billion, Brazil $60 billion, Argentina costs $40 billion. However, these countries couldn't pay back, only interest payments, export revenues. If you don't pay Mexico in August 1982, this could trigger global financial collapse. American banks borrowed most of this money, and in the event that Mexico had bankruptcy, major banks like Citibank, America Bank, and Chase Manhattan will experience significant losses. Some banks seemed to be bankruptcy and all banking systems were compromised. Volcker could allow banks to damage, it could keep markets free. But he did not prefer it. Instead, created a recovery plan through the International Money Fund. IMF would continue to provide enough money for interest payments to Mexico, Brazil, Argentina, and other countries. Structural adjustment loans for these loans were called and presented under certain conditions. The terms were quite challenging. Governments had to share their state assets with foreign investors, and they have exchanged money to meet interest payments to restrict their spending. There is a noteworthy point here. IMF loans did not reduce Borku, it was only managed to return it into a continuous cycle, but it has become permanent. This was one of Volcker's innovations. When it becomes unpaid, it was necessary to reconfigure instead of forgiveness. The political and economic concessions were borrowed to continue their pay. Countries that cannot pay have to enter the influence of foreign economic policies to open their economy, sell products, and pay their debts. This model was repeated for 40 years, in Greece 2010, Argentina in 2001, Sri Lanka faced similar problems in 2022. The same structure has been maintained with loans that IMF continues to pay interest. Saving measures were taken, the sovereignty was delivered, and the debts were never eliminated, only reconfigured and made permanent. Volcker lost his life in 2019. Even if countries take the power of payment, they were not allowed to fall on the road. They are refunded with continuous borrowing, and interest are transferred to creditors. According to Patterson's model, the government receives debt, he will constantly pay interest and never pay back. With the innovation of Rothschild, make-boron can be applied on a global scale. So, you'll get or get credit. This is a network. The Temerit system in the crash phase. When you add Morgan's mechanism, the central banks create money to purchase state bonds. The government can always receive more debts. When we add the salt of Volcker, when the countries pay back, they are reconfigured, unfed, and the flow of interest is provided. The result we have reached today is the global debt of $315 trillion, state boron, company Borku, and residential debt. No will never be paid back. All these are paid interest and all connected with the financial system. Therefore, there is a risk of falling anywhere. There is a special mechanism that governs this situation. The U.S. government is interested in debt of $38 trillion. So, who does this debt? About $20 trillion belong to the American public. Pension funds, mutual funds, insurance companies, banks, and Federal Reserve have these assets. These institutions purchase treasury bonds for those who see as secure assets. But these Tavoler paid interest every year $1 trillion. This interest is provided with tax revenues. So, taxpayers send money to the government, and the government transfers this money to the bonders. Tavel owners are organizations that often have rich employees contribute to this system every year. Another $18 trillion debt belongs to the government. Social Security Fund and Medicare Trust Fund has been borrowed from programs and spent these coins. Now the government borrows taxpayers to save those bonds. Social Security causes government to increase taxes when needed or to get more debts. This is a jealous loop. However, interest continues to flow in any case. Currently, this situation has reached global size. Japan faces $9 trillion in Japan Bank. Europe mostly owes European banks and European Central Bank. China carries important local debts through state banks. Every country manages a similar system and all connected together. Japan invests in U.S. Treasury bonds. The U.S. has European bonds through IMF. Europe creates national debt through the World Bank. This is a circular structure. Everyone borrows each other. And interest is to the organizations that govern debt. That's why this situation never ends. If the U.S. decides to pay $38 trillion, the money supply will collapse. Because the government has created the dollar when he received debt. If the debt is paid, this dollar disappears. As a result, deflation, economic stagnation, and collapse occurs. So the government can never close the debt. You must have to pay interest, constantly continuing to borrow. This applies to a global scale. If each government paid their debts, the global money supply decreased by 2% in 3. Not enough money to trade. System will collapse. So, debts cannot be completely eliminated. This condition is structurally mandatory. And there are those who gain from this structure, institutions with debt bonds. Asset managers such as BlackRock, Vanguard, State Street, Fidelity control $1 trillion. These companies purchase government bonds with retirement accounts and insurance premiums of other people. The U.S. only collects interest income from Japan. These trillions take interest payments from taxpayers to bond owners. The largest transfer of wealth in history is carried out continuously and structurally, and because it is invisible for most people, it is not tax, debt service. But the mechanism remains the same. Employees perform payments, institutions collect this money and never decrease in debt. It is important to clarify a final point here. For architects did not create a conspiracy together, each of which lived in different centuries. However, each effort to solve a problem that benefits bankers. Every new solution is based on the previous one. Patterson made Borku permanent in 1694. Rothschild moved to a global measure in 1815. Morgan has managed to make this situation permanent in 1913. Volcker met failure in 1982. Those who have been found in their possession manage their debts attracting interest and are the financial institutions of the final winners. Not governments or taxpayers, are financial institutions that provide real earnings. And the last truth is that $38 trillion debt does not constitute a crisis for them. This is a business model. Each debt is an element in the list of assets. Provides a collateral for more debts. As long as it is safe and people believe that the government will pay interest, they continue to maintain the system function. Debt trap is completed. No escape. Not affecting the entire financial system. For architects built a system in 3 centuries. If you notice that the government debt is not an error of 38 trillions, then you will begin to figure out how it really works. If you want to learn how the machine is designed and who is checking, because they will not teach this topic at school. Teach you a problem of debt. But architects knew there is no problem of Borken. This condition is fundamental. And interest is a fee we pay for our lives.